Good afternoon, ladies and gentlemen, and welcome to this webinar on DORA compliance. I'm Alan Calder. I'm your host for today. I've been, if you don't know me, I've been in the cybersecurity and cyber compliance industry for more than 20 years now. I've written a number of books on things like governance, risk management and compliance, on GDPR, on ISO 27001, which are used fairly widely across the industry. And the company I set up, IT Governance, in the EU, the UK and the US, is a leading provider of the whole range of services that organizations need to address their range of challenging compliance needs. 20 years of experience, 200 people, many of whom have been with us for many years and so have a depth of experience and knowledge, have helped us work with more than 12,000 clients across 5 continents. We've got a comprehensive ISO 27001 GDPR cybersecurity and privacy offering. We're really the market leader for GDPR products and services through the IT Governance company and our various subsidiaries which provide more specialist services. We pride ourselves on expertise, on the way in which our expertise helps our clients have peace of mind so they can concentrate on their business while we give them what they need to meet their cybersecurity and compliance obligations. We've delivered some 1,600 cybersecurity projects, helped 1,300 organizations get ISO 27001 compliant, issued more than 7,000 Cyber Essential certificates. We've got more than 1,000 companies using our GRC software. So what we draw on in a webinar like this is the experience of many members of staff working with many customers across many sectors and collecting feedback in ways that help us turn that into information, knowledge and insights which we hope are useful to all of our customers. The webinar today is really looking at DORA, the Digital Operational Resilience Act, its significance to financial entities, primarily in the European Union, and a number of things that flow from that. I'm expecting to talk for around about 40 or 45 minutes or so, going through the agenda, which looks at what DORA is, at the related directives, how it enhances, designed to enhance digital operational resilience, the benefits and importance of compliance, and how CyberComply can help the compliance journey. As I said, about 45 minutes or so of me talking. You will have noticed that you're all on mute. That's to try and help avoid the kind of noise which you might hear in the background here as the bells of St. Mary's toll the hour. But as we get to the end of what I have to say, please we'll open up for questions. If you find you have questions as I go through the webinar, please do put them into the question box in the GoToWebinar panel. You'll see there is a small area, a line there called questions. If you click on that, you'll find you can type a question into that. And if at any point you have a question, please do put it directly into the question section of your GoToWebinar panel. When we come to the Q&A at the end, I will take whatever questions they've got. I'll share the question with you and then, to the best of my ability, answer it. So that's the plan for today. In all, maximum of 1 hour. So we will be finished by no later than 4 o'clock British summer time. And the first question which tends to be asked is, will the slides be available? Yes, the slides and recording will be available to everybody who registered on this webinar. They'll go out sometime in the course of the next 24 to 48 hours or so. So into our first topic, which is what is DORA? Why is it significant for financial entities? And of course, that kind of leads into the what do we have to do to meet the compliance obligations? And thinking about what DORA is you kind of got to see it against the background of NIS, the Network and Information Security Directive, which being a directive allowed for variable interpretation and implementation across the European Union. In most countries, the financial sector would have been treated as a critical national infrastructure component, but not necessarily consistently. And what we've seen over the course of the last years is escalation of cybercrime activity, particularly focused on the financial sector. Financial sector is where the money is, why cyber criminals go for it. And the challenge for the European Union is, of course, that there is the possibility that a cyber attack on one institution could spread to a number of other institutions who have the same kind of vulnerabilities. So there is genuinely the possibility of systemic risk of cyber attacks spreading, affecting the whole of a financial subsector, or the financial sector as a whole, which can have a big impact on the European Union, on the ability of organizations to trade. Money is, pretty fundamental to trade and to life, and so ensuring that the financial sector is resilient against cyber attack is a key logical strategic direction for the European Union. And that kind of leads to, you could read more about it. You could download DORA. It's available, as is all EU legislation from the Eurolex website. You can download it in all the range of official languages of the European Union. But that's the background fundamentally to the Digital Operations Resilience Act. It's about ensuring that there is a harmonized approach to digital operational resilience across the whole of the EU's financial sector. And that affects not only the 22,000 plus organizations who have financial licenses in the European Union, but it also very specifically affects, because they're within the scope, are ICT suppliers, so managed service providers, who are providing ICT services to the financial sector. And much of the financial sector, to one extent or another, depends on third parties. Third parties, not necessarily only MSPs, of course. You could be using a third-party settlement organization. So the impact of DORA is on everybody in the financial sector, the European financial sector, plus service providers. So DORA, published in the official journal on the 27th of December 2022. It is the regulation supported by 3 directives, and those 3 directives amend a number of other existing EU directives to bring everything into line with what DORA is requiring. And DORA fundamentally is looking at the network and information systems security requirements, and more than just security, it's about resilience for organizations in the financial sector. And resilience is a key word when you're thinking about DORA, because resilience is about not simply stopping attacks. Resilience is about recognizing that cyber attacks, to one extent or another, will be successful. They will penetrate the first layers of defense that you might have, and therefore the ability of organizations and the financial sector as a whole to cope with attacks, to be able to respond to them, to detect them, to respond to them, to negate them, to deal with them, to recover from them. All of those are key parts of ensuring that the financial sector is robust, and it's robustness that's at the heart of ensuring the financial sector endures the range of attacks that come. And it's kind of interesting. There was an NSA article in the last 24 hours with the NSA saying that we're not far away from the point at which any cybersecurity attack may be construed as a nation-state attack. The nature of the relationship between cyber criminals operating under the protection of nation states and Russia, Iran, North Korea, China, from a Western perspective, all in that arena. The step between what's actually happening and seeing that as cyber war is maybe not that far away. So a robust European robust European financial sector is a fundamental component of a robust European Union. So what is DORA looking for? DORA is looking for really 2 things at the high level. The first is that financial entities implement an internal governance, risk management, and compliance framework. It's about GRC. It's about what the board and senior management do, and it's about how they manage risk to information and communication technologies. That framework, that GRC framework, must be backed up by an ICT risk management and incident management process, which flows into a business continuity process, supported by testing of ICT technologies, of continuity plans, testing to make sure that everything that might be necessary in the case of a cyber attack or a cyber breach is going to work when it needs to. And the second big component is to make sure that contracts with third-party ICT suppliers provide suitable assurance of their information security. In other words, the fact that somebody you depend on an ICT supplier, they've got to be able to demonstrate that they themselves are secure, that if they're part of your critical infrastructure, you can manage them as part of that critical infrastructure, that if they have a financial event or a cybersecurity event which makes them not reliable, that you can exit from the relationship in a way that doesn't disrupt your services to your clients. So it's a challenging set of environments. And these are, not in a sense anything different from what most managements and most supervised authorities have asked of financial sector organizations over the years. DORA really codifies and makes clear and in a lot of detail what it is that organizations have to do. So the regulation also enshrines the principle of proportionality. So it doesn't just say one size fits all. It recognizes that financial entities may have slightly different approaches to risk, that in some sectors the overall approach might be more open to risk than in others, that in some sectors, some organizations might be more open to risk than in others. And DORA recognizes that. And so it has built into it right from the outset the idea that organizations should be able to plan their DORA compliance, taking account of their size, their overall risk profile, the nature, scale, and complexity of their services, activities, and operations when implementing measures to meet their obligations. And that also stretches to recognize explicitly that micro businesses do not have to put in place the same level and detail of compliance activity that normal organizations do. And micro organizations typically are 10 employees or less. There are some provisions for organizations which have between 10 and 250 employees where the obligations are slightly lesser. But really, broadly speaking, if you are 10 employees or less, you have got a much greater room for maneuver in terms of what is proportional and appropriate to you to implement to meet your DORA obligations. You're not outside the scope, you're within scope, than you are if you are over that. If you're over that, DORA is much more explicit about what you have to do. And so obviously part of any DORA compliance journey is to get hold of the law and to read it. It's not easy bedtime reading if you want to stay awake, but nevertheless, it's pretty clear about what you have to do. So what do you have to do? Let's just kind of look at the overall approach first of all. First of all, of course, is as you'll all remember, there is a difference between a directive and a regulation. DORA, as the name identifies, is an act. It's a regulation, whereas directives set minimum standards and parameters that member governments across the European Union can choose how they implement. The EU simply sets a deadline by which every member must put the directive into force, however it chooses to do it, gives it flexibility about how it does that. It's a directive after all. A regulation is different. A regulation goes into force across all members of the European Union in exactly the same way. While member states may choose to put it into their own legal system in whichever way suits them, they might make it a law in the member states, however you do it, but nevertheless the regulation will apply whatever happens in every single member state and will apply as written. It's not open to interpretation other than in areas where the EU has made specific provision for derogation of power, and there's not a lot of that in DORA. DORA is pretty explicit and applies across the whole of the European Union in terms of what has to happen. And DORA, which is officially called Regulation 2022, because that's when it came into effect, -2554, sets out requirements covering, first of all, ICT risk management. We'll talk very little bit about that. Then incident reporting, recognizing that however good your risk management processes are, you're going to have cybersecurity incidents. As part of trying to make sure that you are able to cope with incidents as they happen. Digital operational resilience testing is covered explicitly. And then the recognition that the nature of systemic risk means that organizations should be encouraged to share information, provides for that possibility, and sets out the requirements covering the environment within which information sharing can take place. And then there's a significant element of DORA which focuses on third-party or ICT third-party risk management and the obligations and accountability of financial entities to manage their ICT third-party risks. So if you like, 5 key areas for financial entities to focus on in thinking about how you go about meeting your obligations, your DORA obligations. There are 3 additional areas that are covered. So DORA covers what the contractual arrangements have to be between financial entities and ICT third-party service providers. Very specific set of requirements. So you can't just go to your lawyers and say, create me a contract. It's got to comply with DORA's set of requirements for what must be dealt with in your third-party contract. It makes provision for an oversight framework for critical ICT third-party service providers. It recognizes the risk that a small number of ICT service providers might provide such a concentration of critical services that if they themselves are attacked, they could have an impact much more widely on the financial sector. So DORA provides for an oversight framework to make sure that critical ICT third-party service providers are genuinely robust, secure, reliable, resilient, and can be depended on and managed in an environment which meets the regulatory requirements. And then finally, there is a set of rules for cooperation amongst the supervisory authorities, competent authorities in the terms of DORA, and the basis on which that supervision and enforcement of DORA needs to be carried out. You would expect to see that in any regulation. There are going to be further technical requirements set out by the 3 European supervisory authorities. That's the European Banking Authority, the European Insurance and Occupational Pensions Authority, and ESMA, the European Securities and Markets Authority. Until those technical requirements are published, financial entities need to refer directly to the DORA regulator. It's important. You can't sit and wait, and I'll talk about timelines shortly. You can't wait until everything is clear, because DORA is in force from middle of January 2025. So you need to be fully compliant by then. And as you look, if you haven't already had a look at the detailed requirements, there is a lot of work to be done. So you can't afford to wait until everything is clear. Getting on with meeting the requirements of DORA will cover off most of what you need to do. Certainly those clients who are on things like the CyberCompliance platform would expect to see the new requirements fed into that as they become available. The other point to bear in mind is that NIS 2 that's the revision to the Network and Information Security Directive. NIS 2 is coming into force. DORA specifically provides, because NIS recognizes financial sector as a critical national infrastructure component, DORA says that organizations complying with DORA are exempt from complying with NIS 2. That means you don't have to try and work out how to meet a double set of compliance requirements. You just concentrate on DORA, but you also have to recognize that your DORA project has got to take place alongside whatever PSD2 requires. Transition, if you are in the payment services businesses, to PCI DSS version 4, which is happening through the next 12 to 18 months. And of course, the introduction, if you're using the SWIFT system, of SWIFT self-attestation. You need to have made sure that if you're using the SWIFT system, you've attested that you are compliant to their security requirements. There's a bunch of cybersecurity stuff going on, and we're seeing more and more organizations having to grapple with a growing range of regulatory requirements around cybersecurity and privacy. We've already got GDPR, we've already got NIS 1, NIS 2, which, if you're financial sector, you can now safely ignore. DORA, PSD2, PCI DSS version 4. So it gets a more and more complicated environment, and you need to build an implementation framework which is integrated, which doesn't tackle these in in silos, because if you tackle them in silos, you're going to create major vulnerabilities and you're going to spend far more than you need to be spending on compliance. So an integrated compliance approach is what you need to do. Competent authorities are empowered, as you would expect, to enforce that they can exercise. Their powers are around issuing penalties for non-compliance, fines, sanctions, license suspension, revocation of license. They can investigate. They've got the obligation to investigate critical incidents. They can enforce corrective actions. If they've said, if you said you're going to make a corrective action, you don't, they can enforce it. They can enforce collaboration and cooperation, and they are entitled to have a proactive compliance regime. So exactly as supervised authorities have around GDPR, but for all financial entities across the European Union, as elsewhere, you're kind of used to the regulatory power of the supervisory or competent authority. That's simply extended, and we expect to see them gain greater capability and resources over the years ahead as they take on more and more of the mantle of really ensuring that DORA is properly enforced. So who's caught by it? And the answer is basically, if you're in the financial sector, you're caught by it. DORA sets out very clearly in, I think, Article 2, all of the subsectors of the financial sector who are covered by it. This is the list of definitions. They're all specifically defined. DORA also has a very specific set of definitions. So if you're wondering, am I a crypto asset service provider, for instance, you can go and look at DORA definitions and it will tell you whether you are or you aren't. The clue is if you have to have a license, if you think you're in that, you probably are. And the other sector, which is specifically within the scope of DORA, is ICT service providers. They're listed. I've only given you the financial sector here, but ICT service providers are listed. And while it doesn't say in DORA that it's ICT service providers to the financial sector, we kind of assume that that is taken as read. It's not if you're an ICT service provider and you're supporting a construction company, you suddenly fall under DORA, because DORA is about digital operational resilience for the financial sector. I'm sure we'll see that confirmed at some point, but ICT service providers to the financial sector. So very broad. There's about 23,000 financial sector organizations in the European Union who need to comply with this. Organizations in the EU and the US, elsewhere in the world, who have subsidiaries in the European Union or who have licenses to provide services into the European Union, you're also caught by this. So this is everybody who is within the European Union financial regulatory environment. You have to comply with DORA. Pretty straightforward. And the timeline is also pretty straightforward. It entered into force on the 16th of January 2023. It applies from the 17th of January 2025. So just about 15 months left to go. Today is usefully the 18th, so it's kind of 15 months from now. There's, for most of us, Christmas in between, which will disrupt. Not everything is yet clear. There's not a lot of competence around DORA specifically in the market, but the clock is ticking. So you've also got to be thinking, when you're looking at your own compliance framework, how do we make this happen? Most of the sectors suddenly going to go, probably by about spring next year, go, wow, we've got a lot of work to do. So suddenly it will get really tough to access resources and support. So getting started sooner is a much better idea than waiting. And just from a how do we do this, I'm going to talk a little bit about how do we do this. It's worth making the point that two existing international standards, ISO IEC 27001, that's the Information Security Management System standard, and ISO 22301, that's the Business Continuity Management Standard, provide best practice that pretty well covers all of the cybersecurity, incident response, and business continuity requirements of DORA. So, as we've been working on our products and services to help our clients achieve DORA compliance, it's become absolutely clear to us that, in a sense, DORA has gone to and drawn from the best practice that's in ISO 27001, whether it's around risk assessment, control selection, control monitoring, top-level management commitment and endorsement, in ISO 22301 for business impact assessments, for incident management, for tabletop testing, all of that which is in 27001 and 22301 is also in DORA. So you could simply say, actually, our fastest route to achieving cyber resilience that DORA requires is going to be to implement in a combined fashion, perhaps, ISO 27001 and ISO 22301. And like DORA, for many organizations, actually that's not necessarily a huge amount of work, because you may already be on the track to 27001 and 22301 as part of NIST, complying with the NIST directive. It may be areas in which you don't have very many gaps, but there is best practice already clearly set out. It's a very straightforward way for you to get on with pursuing compliance. You're thinking about how you're going to do this. The starting point for any organization really must be the board. This is a GRC framework. It's fundamentally about how does board and senior management go about ensuring it is accountable under DORA cyber resilience inside the financial entity. So briefing the board on its obligations, not just a cursory 5 or 10 minutes, but ensuring the board genuinely understands what it has to do, and then having a qualified board member, if you like, a DORA risk director who is had additional training and exposure, who can take on responsibility on behalf of the board for oversight of the whole compliance project, ongoing compliance thereafter, and report to the board in much the same way that you might deal with health and safety, you might deal with finance. You have a responsible director who can, on behalf of the board, exercise oversight, report to the board, ensure the board is properly employed and involved in DORA compliance. You need qualified internal practitioners, and that might be people who've got an ISO 27001 qualification. You add to it an understanding of what DORA requires, but you need people who understand the specific requirements of DORA. And the specific requirements, while I talk about it's primarily a GRC, a governance, risk management, and compliance framework, it also has very specific requirements around technology, around the ways in which you deploy and manage technology. So somebody who understands cybersecurity, both the technology aspects and the GRC aspects, is important. It's a compliance framework. It applies to your ICT supply chain. You have to audit your own compliance. You can outsource that. You can do it internally. There are rules around how you ensure that you don't have conflicts of interest, but you have to audit your own compliance, and you have to make those audit reports available as demonstration of compliance. And so you're going to need qualified lead auditors who are not just ISO 27001 or 22301 trained, but are trained on how to audit DORA compliance. What are the things they need to be looking for to establish that as an organization you are compliant with DORA? How do you audit? What's the audit plan look like across your ICT supply chain, particularly your critical suppliers of ICT services? You're also going to need, in the management team, maybe on the board, a qualified risk assessor. Risk assessment is so fundamental to ISO 27001, and particularly taking account of that principle of proportionality, that what you do has got to be proportional to your risk appetite, to your circumstances, environment, and so on. You need to be able to define what your risk appetite is. You need to be able to define a risk assessment process which is robust. You need to be able to look at the threat horizon. You need to be able to work out how today's risk assessment needs to change and vary in the light of what you see coming down the track towards you. On a triennial basis, you have to carry out threat-led penetration testing, not just your annual penetration testing, but threat-led. So you need to be sufficiently aware of what the threats are, how those affect your environment and your infrastructure. You have to be able to design and discuss with the providers of penetration testing services, who, like all testing services, should be independent of what they're testing and what a threat-led test looks like. So you need to build competence. Key starting point for a DORA project is we need to have people who are competent to do the work that needs to be done, who are trained, who are on a CPD track. That means they're going to continue to have their knowledge updated, but they're competent and we can depend on them to do what they've got to do. The other area you should be thinking about from the off is a platform. You should be thinking about, this is not something, frankly, you can do on a spreadsheet. This is not something you can do in Word documents. And there's not much point, frankly, in trying to build your own platform. You need, if you're getting managing DORA and all the rest of your compliance requirements on an ongoing day-to-day basis, you need to be able to turn to a platform which itself is robust, which captures and encapsulate best practice around 27001, 22301, GDPR, DORA, and all the rest, and which enables you to have staff who are trained on how to do their roles on a platform which you know will be consistent and continuous year in, year out. A spreadsheet or similar kind of depends on somebody turning up to do work. And robustness, resilience in managing DORA means you need a lot more than that. So you should be thinking from the off about how do we do DORA using a compliance platform. This is, if you like, the growth of what will increasingly be called the cyber regulation technology sector. It's the only cost-effective and sensible way to manage multiple compliance requirements. So that's a kind of starting issues to think about: competence and platform. Your implementation timetable, and as I said, I think timing is of the essence. You've got 15 months remaining. You've got to get on with it. The kind of steps that you're going to take are building knowledge and competence first. You need to have people who know what they're doing. And then really, I think it's a gap analysis. Many organizations will already be doing many of the things that you should be doing because, you know, of this, because of your licensing requirements, because of supervisory requirements, because of good practice. You'll already be doing many of the things that you should be doing, but maybe not in the detail, maybe not in the level of comprehensiveness that you should. So next major step is gap analysis. You need a competent person who can do a gap analysis, and you need people who can understand what the gap analysis is going to tell you. And that's what's the variance between what we're currently doing and what DORA requires us to do, because out of that we can create a compliance roadmap, a project roadmap. The first step on that's going to be really policy and procedure design, taking existing policies and procedures, updating them, amending them, filling holes where you have them, making sure that the cascade of, you know, they're clearly defined in DORA, what you have to have in the way of policies and procedures, making sure those are all there, they all meet DORA's requirements, and that they're understood by people inside the organization. There's going to be technology adoption that you need to be thinking about. There are going to be, in terms of how you detect, how you protect, how you escalate, there are going to be technologies that you may not have in place that you might be thinking about, but you need to be looking at what technologies do we have to have in place to meet the specific DORA requirements around ICD, ICT detection, ICT incident detection response, and so on. How do we do that? What budget do we need? That needs to go into your forward planning around budgeting. You need to be thinking about competences you might need to deploy additional technologies, but that's an early step on your roadmap to compliance. It's worth starting resilience testing early on. Resilience testing early on is an important step because you're going to find weaknesses, and you want to be identifying those weaknesses. You want to get good at. There's a specific requirement in DORA that weaknesses identified through testing are fixed, and that the fixes are validated. So you want to make sure you're getting all of those processes in place that you can identify fixes, you can put them in place, you can validate they're working effectively. That rolls into your internal audit process. So a lot of, in my view, a lot of the effective implementation of DORA isn't just about doing things, it's about having things done and testing them, making sure they're working and learning from those, and making sure that by the time you get to January 2025, stuff works, your resilience processes genuinely actually work. You need to be getting stuck into the ICT supply chain. You've got to map it, just as you've got to map all of the assets on which your critical functions depend. You've got to map all of the suppliers on which you depend, particularly the critical suppliers. You've got to then look not just at the suppliers, but you've got to look through them and across them. You've got to try and identify single points of failure, concentration, risk, where there might be one provider who, for instance, is providing the same service to a whole bunch of different organizations in your sector or organizations in the financial sector. So if they fail, the impact on many organizations is severe. And you think about that in terms of some of the breaches that we saw through the last 24 months, where an attacker was able to get into a piece of software, for instance, which is deployed across tens of thousands of organizations, because they've been able to put the vulnerability into the software. When all those organizations update their software, the vulnerability is loose on all of them. It's those kinds of concentration risks that DORA wants you to be identifying. It also wants you to identify where a organization that you might think is independent isn't, because it's dependent on some other organization. To look through an organization, you might find that there are 5 apparently or 25 independent ICT suppliers, all of whom to one extent or another depend on a single supplier. So it's identifying where single points of failure are, making sure that your resilience planning deals with them, and make sure that when you look at vendor contracts, and as I mentioned earlier, you're going to have to review all of your vendor contractual terms. They provide for you to be able to exit arrangements smoothly where necessary, that you can end arrangements where organizations become too much of a risk, or they fall outside your risk profile, or they become financially unstable. But it's a key area. Part of your stability, your resilience depends on the resilience of your ICT suppliers. And so DORA has specific requirements for how you go about dealing with those. So key milestones. And for me, again, you should be aiming to cover most of these, not by next autumn, but by next spring. You should make sure you're tackling most of these early on, because the business of improving, making them genuinely resilient, being at a point where come January 25, if you have a cyber breach, because remember, it goes into force, it's in full effect. You have a cyber breach on the 20th of January, and you then say, I haven't quite got round to doing this stuff. Well, the answer is you've had 2 years to do it in. It's not an excuse to say, haven't quite got round to it, it's only just gone into effect. You've had 2 years to make the transition. So you don't want to be remembering how focused cyber attacks can be, and I kind of expect cyber attackers to have a go, because that's what they do. You want to make sure that when they have a go at you, you're breached, you will be. Everything else is in place so that your response is as it should be, it's effective, you are resilient, you're able to cope and keep on looking after your customers and providing service. So that's the kind of implementation timetable. Of course, in the same way that GDPR impacted privacy across the rest of the world, I expect to see DORA impact resilience across the financial sectors in the rest of the world. There have been other financial sectors who've brought legislation into place. So New York has a set of regulations around how a limited part of the New York financial sector has to put in place cybersecurity compliance requirements. That's been there for the last 4 or 5 years. But DORA, I think, will drive digital operational resilience across the world. And I think that increasingly, so many financial sector organizations have subsidiaries or want to provide services in, or are ICT suppliers to the EU financial sector, that we will see harmonization of approach to digital operational resilience across the whole of the world. I think as the banking regulatory approach spreads out across the world, we'll see what DORA has brought in, driving a harmonized approach. So to a very real extent, I expect to see that organizations who get to be DORA compliant, who are able to do that, are in a very strong position insofar as they're trading in other financial markets with licenses in other financial markets. If you extend your DORA compliance to those, that you're able to get ahead of competitors outside the European Union. And I think that's a really attractive opportunity for all organizations in looking at how you can broaden your opportunities across the world. So benefits, well, the first obvious benefit, just looking at it not from a regulatory point of view, but from a business point of view, is that you build resilience. And a survey in Germany about a month ago, 52% of respondents said that they see cyber attack now as an existential threat. It's likely to affect the survival of their business. So resilience is a fundamental component just simply of surviving. So directors of businesses, it's a fiduciary responsibility to make sure, looking after the best interest of the organization is kind of what directors are supposed to do. It's a key area for directors, and DORA gives you, in very specific terms, all of the things you need to do to ensure that you are safeguarding critical operations, that you're safe from cyber threats, but also that counterparties, that ICT suppliers are doing the same. You don't just have to hope that they are. You can say, are you or are you not DORA compliant? And if they've got an ISO 27001 certificate, an ISO 22301 certificate, you kind of go, well, yeah, you guys probably are, because you've got some of the external certificates which indicate that you're effective. And resilience is about mitigating risks. So cybersecurity risk, in proportion to your size, risk appetite, you mitigate it, you reduce data breaches, you reduce financial loss. That means that you have less impact on regulatory capital. In compliance with EU regulations, avoid penalties. All of that regulatory compliance turns into genuine competitive edge and operational efficiency. And I think the organizations who are DORA compliant earlier will take advantage of that. I'm sure many of them will. For me, it's a logical thing to be the first in your subsector who is compliant. It gives you a chance to really push ahead. And consumers are increasingly concerned about the security of their money, of their personal data, of the institutions with whom they deal. There's lots of evidence which says that consumers are way less likely to do business with organizations that have been breached. There's hard evidence that says that listed organizations who are breached see an outflow of customers and a reduction in share price. Those things follow. So there's a real competitive edge in being DORA compliant. There's operational efficiency that comes in, particularly addressing DORA compliance, not on a silo basis, but looking at building an integrated management system that integrates information security, business continuity, incident response, supply chain security, all of those into a single risk managed framework that the board has clear oversight of and is able to drive across the organization. Proactive risk management, as the board is able to have, using a good platform, board should have a dashboard which enables it to drill down into detail where it wants to, that gives it a real life today view of what's actually happening in all the key areas of how it's governing risk. That means that looking at the threat horizon, increasingly your risk management becomes proactive. You want to defend against an attack before it happens rather than having to deal with it afterwards. And you build cybersecurity into your strategic planning, building resilience into your technology rollout rather than becoming a bolt-on afterwards. All of those are really sensible, practical things to do, making sure that when you extend whichever particular system it is not just GDPR compliant, it's also resilient, kind of means that you are continuing to be cost effective in the way that you build out your planning. That gives your stakeholders confidence, makes fundraising much simpler, makes all of those kind of activities much simpler. And of course, the data protection, reputational aspects of what you're doing follow through from that. So CyberComply is a platform. I talked about the need for a platform to support compliance. Take a look at CyberComply. CyberComply is a platform that is built around ISO 27001 compliance. It's got probably the best ISO 27001 risk management tool you could find. There's a huge roadmap of development taking place that will make it easier and easier and easier for organizations to integrate a broad range of compliance. And today we see that most organizations probably have to comply with 6 or more regulatory or compliance frameworks, either sectoral or regional, or even across the whole of the European Union, for instance. So take a look at CyberComply. It's designed to enable organizations to manage effectively, robustly, to have a dashboard that enables management to see what's going on, to enable the board to have an oversight, and to manage in an integrated way both 27001 and GDPR. So incident management, data subject access requests, data breaches, all of those are already integrated into what CyberComply enables you to do. And CyberComply you can access through IT Governance EU, the UK, the USA. We've got more than 15 years of experience in helping organizations meet their GRC compliance objectives, and we are a specialist in governance, risk management, and compliance. We're recognized under a whole bunch of frameworks. 27001 compliant ourselves. We should be 22301 certified in the next 3 months or so. We're a global Euro privacy consultancy partner. We're a SWIFT consultancy. We're a PCI QSA. We've got the only 5 DORA professional qualifications that are available on the market for foundations, for practitioners, for lead auditors, for risk directors, and for compliance officers in ICT suppliers. So through IT governance, you can access everything that you possibly might need to tackle DORA compliance. Some of the products and services I've got on this final slide here. So DORA Foundation Training Course, Certified Practitioner Training. You can advanced book on those. I think the first runnings are towards the back end of the year, but you can get into those first runnings right now. You can arrange, we can have a qualified consultant come and do a DORA gap analysis, look at what you've got in place as distinct from, as I said earlier, what you might need to have in place. And we will have a staff awareness e-learning course, a DORA specific cybersecurity business continuity staff awareness training course that will enable you to do what DORA obliges you to do, one of the many things, which is ensure that staff are aware of their obligations and role in ensuring resilience of the organization against the increasingly wide range of potentially systemic cyber attacks. And ladies and gentlemen, that's the end of what I was planning to say. You can find out more about how IT governance can help you through any one of our websites. The services we provide on a global basis, so you can access us through the EU. We'll provide services wherever you need them, through the US or where our larger businesses in the UK. And so now, if you have questions, please, just as I said earlier on, there is a question function in the GoToWebinar panel. If you would like to type any questions you've got into that, what I'll do is I'll pick up the questions, I'll share the question with you, and then I'll provide an answer. So the first question, to what extent can ISO 27001 be leveraged against DORA, is a cracking good question, and the answer is very, very substantially. You could pretty well take ISO 27001 and go through the main clauses, that 4 through 10, and simply recognize, if you like, in your clause 4.1 documentation, which is requirements for interested parties, that your supervised authority or competent authority is an interested party, and the DORA is a regulation that you have to comply with. You could simply therefore expand everything that you're doing for ISO 27001 compliance to build in what you need to do for DORA compliance as well. And ISO 27001 will get you probably 60% of the way towards DORA compliance. ISO 22301 will get you another 30% of the way there, because 22301, which is a enterprise-wide business continuity plan, and DORA is only interested in ICT continuity, not enterprise-level continuity, but ISO 22301 can be deployed to deal with ICT continuity. That'll get you 30% of the way there. So between 27001 and 22301, you'll get 90% of the way to DORA compliance. The other 10% is the very specific requirements of DORA, the supply chain work. ISO 27001 recognizes the importance of supply chain. There's a control in ISO 27002 covering supply chain security, but the specific clauses are DORA specific. So there's a number of DORA specific issues, but 27001, 22301, as I said, they get you very substantially where you need to be. So ladies and gentlemen, any other questions, please do put them into the question and answer section. I can't see any other questions at the moment. For smaller regulated entities, is the employee limit 10 an absolute limit, or only a limited number of staff are engaged in the financial services elements? DORA is not 100% clear. I think you can interpret it as being, to the extent that you can scope your financial services activity to being very specifically contained within a 10-person entity, then you can scope it down. But what DORA is looking at is resilience. So if your small number of 10 people are dependent on an infrastructure which involves a number of other people, you're not going to be able to scope it down and treat yourself as a micro enterprise, because that whole infrastructure is something on which your financial services team are dependent. So my advice, as it tends to be with these things, is don't try and find ways around it. Simply embrace the logic of what DORA is looking for, because what you will see unquestionably over the next 3 years or so is organizations who try and do it, if you like, by shortcuts, will get squeezed out, because the compliance weight will become more and more clear, and clients will become more and more clear about what they're looking for, and organizations who've skimped on implementation will be attacked and will go down. So it just kind of makes sense. Don't skimp. Look at what is the logical way to go about doing this. What's going to genuinely deliver resilience in line with DORA's requirements, and do that. Do third country ICT any idea if the regulators are on track to deliver the required level of 2 techs by the end of the year, early January 2024? No, I can't answer that question. Regulators, they are law unto themselves, but the clear guidance is, until you get any additional guidance, concentrate on what DORA itself says. All the additional guidance is going to do is give you more detail around what is already in DORA. And the guidance is guidance. DORA is the act. That's the set of requirements. So focus on what the act tells you to do. And then as guidance becomes available, that might lead you to vary what you've done, but you're not going to go wrong by implementing what DORA tells you to do. Do third-party ICT, third-party service providers need to register a subsidiary in the EU? No, there's nothing in DORA which makes that a clear requirement. You don't have to have a license to trade in the EU. DORA clearly recognizes there will be third-party ICT service providers. What it asks is that those organizations that are contracting with them also recognize that it has in place the contract, the financial entities have in place appropriate risk management mechanisms, which recognizes that the third-party ICT provider might be subject to a different data protection regime, different compliance regimes, different support regimes, and all of those have to be part of how the financial entity identifies and manages risk. So I can't tell you strategically what the sensible thing to do is, but that's also going to kind of depend on the extent to which the EU financial sector is a critical sector for you. If you're a third-party ICT service provider outside the European Union and you are critical, in other words, there are a number of companies that depend on you, you might find that under the concentration risk and the lead oversight provisions in DORA, which are designed to deal with exactly these issues, you come under pressure to create an EU subsidiary, which can be resilient very clearly within the EU regulation. But right now, no, there is no requirement in DORA that you set up an EU subsidiary. What makes an ICT third-party service provider critical? It's not so much you as a service provider that's critical, it's whether the services you're providing are critical to your customers. And that's really a definition that your customers have to make. The definition is one which they make on the basis of their risk assessment. They might be directed by the competent authority to treat particular services as critical. They might have to agree with the competent authority that particular services are critical, but it's driven by your customer. And if you're thinking about what it might be, the critical services are those on which your customer depends in order to provide its core services to its customers. So if you're providing hosting services for your clients' cloud-based customer service to operate, and if your service goes down, that means your customer's service goes down. Well, you're providing a critical service because your customers depend on what you're providing. So it's a practical definition as to what critical is. It's not a legalistic definition, it's practical, and you should be able to identify pretty easily for yourself what critical services there are. And in talking to your customers, that's the starting point. Focus on what you think are clearly critical, agree those with your customers, and focus on how you're going to make sure that they are able to manage their risks in respect of those services. Organizations that fall under the financial services sector rather than just banking. Yes, that is correct. So there's an earlier slide which lists all of the financial sector organizations that are caught by DORA. And in simple terms, if you're in the financial sector, assume that you're probably caught by DORA. There are some minor exceptions, but you go to look at that slide and it will tell you exactly who is within the scope of DORA. I think it's DORA Article 3 sets that all out. If you're in the financial sector, that includes crypto, then you're subject to the requirements of DORA. Ladies and gentlemen, any other questions? I hope that the answers I've given have been so far useful. The slides and recording will go out in the course of the next 48 hours to everybody who registered on the webinar. In the absence then of, oops, one more question. How bad will the resource crunch be next year? Well, there are 22 to 24,000 companies, entities caught by DORA in terms of existing licenses in the EU. There are several thousand ICT service providers who are providing critical services to the financial sector. And at the same time, many organizations, the financial sector, will be coping with, if they're dealing with payment cards, with transition to PCI DSS version 4, which has got some significant changes in it. If they're not already doing it, they will be implementing SWIFT compliance requirements and self-attesting compliance to SWIFT. There's PSD2 and everything that requires. And there will be, if you're on the, if your parent company is listed on the SEC in the US, there's a whole set of implications from SEC regulations coming. I think the resource crunch next year. There is already a shortfall in privacy and cybersecurity professionals the world over of 2.7 million unfilled roles. I think that the implementation requirements, the audit requirements of DORA are simply going to create a much more severe crunch. And so the pressure is going to be on organizations to get themselves capable of managing their own resilience, which is why, qualifications like the 5 DORA qualifications that the IBITGQ, which is a German certification body, has come up with, are critical components of getting yourself to the point where you can implement and manage your own DORA compliance. IT Governance is an approved training organization for IBITGQ, so you can access those. But of course, doing it yourself, there's a learning curve. You've got to get the qualification. You've then got to get good at what you're doing, and there's practice and time that it takes there. So I think there will be a big crunch. We saw that with GDPR. GDPR had a much bigger scope, but we saw a huge crunch from about summer of 2017, with compliance coming in May 2018. It just got more and more severe from summer 2017 onwards, to the point where we could not scale up fast enough to deal with everybody who suddenly discovered they needed help. And we think that it's smaller, DORA is smaller, but the requirements are much more specific, and the penalties for non-compliance much more severe. We think that the crunch will be much more severe than it was for GDPR. I hope that doesn't frighten you too much. Ladies and gentlemen, I think in that case, we're coming up to 4 o'clock anyway. So I'd just like to thank you all for being with us. We are going to be running a series of DORA compliance specific webinars over the course of the months ahead, alongside what we're doing around GDPR, around the US SEC regulations, around PCI version 4, around SWIFT and so on. So please do take advantage of webinars. We'll send the slides out to you, take advantage of them. And if we can help you build up and get yourself ready for compliance, do come onto our website, do make contact with us. You can do that through any of our websites, and we'll do whatever we can to help you on this next compliance journey. Thank you, and have a good compliance week. Bye-bye.